Here are 5 brand new wheel strategy stocks I recently added to my watch list to help build my wealth. Yo, what is going on, premium chasers? I hope you are having a God blessed day today. Every single person down below is going to get our special 25, my personal 25 favorite wheel strategy stocks. So if you want that full list completely for free, no strings attached, just drop a comment down below on today's video. I'll personally respond to you with it. And while you're down there, hit that like button and that subscribe button, because today I'm going to share with you 5 wheel strategy stocks that I just recently added to my watch list to help build my wealth. Now we're going to be diving into exactly what the wheel strategy is in today's video, taking a look at some of the premiums that these companies offer and kind of giving you a high level overview of everything. And that first one is Starbucks. Starbucks has been getting beat down here recently, as you can see by the chart. Now I have a couple indicators here that I added on that I want to share with you guys that are a little bit newer to selling options. Okay, so the first indicator that I like to have on here is our Bollinger Bands. This Bollinger Band right here is this overlay of these 3 white lines, right? And then I always want to make sure that right here on my period, I have 30 set, right? So basically, if I just zoom in here real quick, this Bollinger Band basically tells you what a stock is likely to trade in. Now, it's a Fugazi, right? Nobody knows what a stock is going to do. But when we look historically, right, it hits the top Bollinger Band, it retracts. Sometimes it goes a little over, it hits the bottom. Sometimes it goes a little lower below that, and it retracts back up. Okay, now I'm going to show you guys why that's important. Now the reason we put the period of 30 is because that gives us our 30-day moving average. What is the average that the price has traded over the past 30 days? And you could see here is $87. That is $87 average price of Starbucks over the past 30 days. Obviously it's trading at around $84.50 at the time of me recording this. The next one that I like to add in here for my indicators are my 2 moving averages, my 200-day moving average and 300-day moving average. Me as an option seller, I don't do this full time. I'm a busy person. I'm sure you are as well. Like, listen, I don't think any of us want to be doing this and staring in front of charts all day. I don't. I surely do not want to be. I have much better things like golf that I'd rather be doing. So that's why I love running the wheel strategy, aka the Ark Options Strategy, because it fits into my life. I can go live, do other things, explore hobbies, and still generate premium income from the market, right? But with that said, I like to always be below my 200 and 300-day moving averages when I'm selling my cash secured puts. It's not always possible, but that's just what I usually aim for. So we can see, why is Starbucks one of my stocks that I added recently to my watch list here? Well, because it is trading below its 200 and 300-day moving averages, and it's also trading towards its bottom Bollinger Band. Now, obviously the setup was a lot nicer earlier in the week when it was trading around 81. This would have been an ideal time to sell a cash secured put. Now, if you don't know what a cash secured put is, it basically says, hey, I want to buy 100 shares of Starbucks on a specific date at a specific price. And you get to name those terms, right? That's the best part about this strategy is, let's say you say 30 days from now, right? Well, you do the trade, you collect your premium just for saying maybe, right? And the reason we want to wait till it's at the bottom Bollinger Band, right? Let's just say 81 right here, right? You could have gotten puts at like 80 or 79 and gotten a really nice ROI on your collateral, as opposed to right now where it's trading at 84. If you try to get the 80s now, your premium is going to be a lot lower. Your premiums are going to be better, right, the closer you are to the current share price, right? So when it's at 84, if you do the 83s, your premiums will be nice. And actually, let's just go take a look right here, right? So we'll just go into our Starbucks right here. And we'll take a look, right? We'll go to our trade options section. We're going to click sell put, and then we'll just go around 30 days out. We'll just go 28 days. That's a put. Selling a cash secured put, everything I do is cash covered. I'm not selling like naked puts or anything like that. So you could see if I do the 80s here, I get $100 of premium, right? $103 to be exact premium. Obviously, results vary. These numbers are constantly changing when the market's open. Okay, so I like to always toss everything into my cash secured put calculator, and you already know it's all free, guys. Link is in our Facebook group. Join us, network with other individuals doing this day in and day out. I can't stress it enough. Surround yourself with people doing this. Your game will be better. So if you want all my calculators, it's free. Link will be in the description to that Facebook group. So we said 103. Now that's going to lock up $8,000, right? It's actually moving. Obviously, it's changing. So we saw 103. We'll just leave 103, but you guys get the point, right? So our collateral here is $8,000. So 80 times 100, right? So $8,000 will be locked up for 28 days. And I like to put all that out. I like to lay it all out. So this gives me a 1.29% return on my collateral in a 28-day period. Is that good? Is that bad? I don't know. You got to make those financial decisions for yourself. I'm just a dude on the internet. But with this said, right, if we go back to our options chain, I always like to confirm by looking at my deltas. So my delta here is a 2-3. There's roughly a 23% chance that I will be assigned, or just about an 80% chance, right, a little less, that I will just expire worthless, that I won't actually have to buy the shares. So when you sell a cash secured put, the biggest risk is that, let's say at the close on October 17th, right, Starbucks is trading at like $75, $70. You're buying it at 80, right? That's the biggest risk of this strategy, right? You're kind of, you have to buy it at that price. That's why we like to stick to stocks we actually want to own. I know it sounds crazy. Everything I do here, I try to stick to like fundamentally sound companies as best as I can. Well, sometimes we'll go into some degenerate stuff. But the second thing that can happen is, let's say on October 17th, Starbucks is trading at $85, right? It's, anything above 80. Your contract expires worthless. Your $8,000 that you've locked up as collateral is returned back to you. And then you run the play again. Come on, baby. That is the best. Guys, come on. Drop some amens in the comment. Can we all just agree this is the best trading strategy? I can't believe that. Like, I don't even consider myself, I am not a trader. Do not even lump me into a trader category. I consider myself an investor, and this is just a part of my portfolio. I have a buy and hold thing that I buy every Monday, but then this is just fun, dude. Like, this is just fun. I really enjoy it. And for me, I've been burned so many times with like scalping, buying options, just weird strategies that I'm just not smart enough to do. And this strat is just so fun. I love it. I love it. I love it. Drop some amens if you love it too. So there we go. That's the first one I'm watching. And the point I was trying to make is, for example, if we did our cash secured put for 80 at 81, our premium would be a lot more, right? That's why the 80 premium right now, we're only getting a 1.29%, because it's less likely to happen now that Starbucks has kind of, bounced off this bottom Bollinger Band, okay? And this is, listen, I'm not about timing the market, especially with this, because at the end of the day, if you just stick to stocks you like and you enjoy and you're bullish on, there's just right times and wrong times. There's no right or wrong time to do it. There's ideal times though, right? So again, if you're trying to maximize premium, being patient and seeing if you can get towards the bottom Bollinger Band on a red day, preferably, right? Since Starbucks is up 1.2% at the time you're recording this, it's kind of going up, right? It's a little bit hard. It's a little bit harder, right? Or not a little bit harder. It's not an ideal today to really sell a cash secured put on Starbucks. You see what I mean? Guys, we're going a little bit long here. I hope this is helpful for you guys. Next one is going to be Colgate. Okay, this one also a bit of a falling knife. I know some of you guys hate on me for liking the falling knives, but I do like the falling knives, and it's a fantastic setup. Take a look at this setup right at that bottom Bollinger Band, right, well below the 200 and 300 day moving averages. Let's go take a look at what kind of premiums Colgate is actually offering right now. So we'll go over to our Colgate. We'll trade options, sell put, and take a look at what options we have here. So we'll go out 28 days here and take a look at this, right? We get a one for the 80s, right? We're getting about a 115. So about this, very similar to Starbucks in a way, a little bit more, about $10 more, 115 for $8,000 in collateral for just about a 1.44% return, right? That's absolutely fantastic in my personal opinion for me, because I love these kind of consumer staple brands that own a lot of brands that all of us have in our house. Whether it's right or wrong, again, I have no idea what I'm talking about. I personally like to invest in companies that own a lot of brands. Like, I don't know, it just gives me a sense of diversification in a way, okay? Now, of course, guys, make sure you are logging all your trades. If you want my full trade log, click the first link in the description of today's video. Next one I'm watching is a little bit on the cheaper end, and that is Chipotle. Okay. Listen, I'm not usually one to invest in this kind of stuff. Like, I'm not. If you guys have been OGs on the channel, you guys know I stick to like IT networking products and like consumer staples and airlines and occasionally some little degenerate things. Like I lump Snapchat into that, right? But with that said, I do think Chipotle is just been fallen off a cliff, and I do think there is some great opportunity here with Chipotle, especially since it's well below the 200 and 300 day moving averages and below its 30-day moving average as well. So I am monitoring Chipotle for smaller plays, right? It's a much smaller play, and it also has some decent premium returns as well. Next one I've mentioned on this channel before, and this one has been going sideways, actually setting very nicely the past couple months for iron condors, very nicely for iron condors if you were doing that. Not something I necessarily do much anymore, just because I stick to primarily the Ark Options Strategy now. But with that said, Hormel Foods, the premiums just aren't really necessarily that great just yet, but I'm hoping as we kind of stay below this, like in this $25 level, and we continue to work our way down, and obviously buyers are still stepping in, we should start seeing our premiums increase. But this is also one that I'm really focused on, the public portfolio, and that's what this trade log actually covers. This is all my public portfolio trades that I've done, all my ROI on collaterals, all that good stuff. But this is one of the ones I do want to get into. I just need that premium to be closer to that 2% ROI on collateral, because that's my goal for the public portfolio. Okay. And again, that's my personal goal. Again, if you want that full trade log for yourself so you can use it and follow along with what I'm doing for idea purposes only, you can click that first link in the description of today's video. And then let's go into the last one, and that is General Mills. We just had earnings on this, guys. This is one of the ones where I'm like, damn it, I should have freaking done it. So we just had earnings on it, and they had a great earnings report. So we saw a nice little pop here. But take a look how tight this Bollinger Band is, guys. This is nice. I like when Bollinger Bands are like this because it is a lot more, quote unquote, again, nobody knows what the market's going to do, but it's a little bit more predictable on what a stock is going to do, right? If we're just kind of sticking in this level, look at this. Look how long we've been in here for the past few months now, just in these levels, this 48 to 50, not even $50 level. We only just got to 50 now, but we've been in that level, and that really makes it a lot more predictable, and it gives me a little bit of confidence when I'm selling cash secured puts or doing my covered calls closer to the money. And in my opinion, a great setup, especially with it being below the 200 and 300 day moving average. Guys, don't forget, drop a comment down below, and I will send you my 25 favorite additional Ark Option Strategy stocks. And I want to tell you guys about Option Seller School, which is a mastermind and mentorship program. If you are a non-toxic individual, right? If you are somebody that's financially stable and you want to surround yourself with other option sellers, both beginners and veterans, doing this day in and day out, talking pretty much all day, it is so fun. I literally love this community so much, and you want to learn more about it, plus get my full trade log, click that first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.